to another Smart Knowledge U podcast. Today, it's going to be a little free form and I'm going to discuss three main topics. Number one, why investors tend to make bad decisions. Number two, the signs in the gold market that no one is paying attention to but shows you where gold prices are heading. And two, the signs in global stock markets that show you where the US stock market is heading. So let's begin with number one, the factors that lead people to make bad decisions. Oh, before I continue, actually, I want to let you know that I will be following this podcast up with an article because I know I have a lot of international listeners whereby English is not their first language, English may be their second or third language. And it's a lot easier for them to read than to listen to what I'm saying. So I will be following this up maybe in a week or two. Just remember to go visit my blog at www.smartknowledgeu.com/blog. And you can find the article there that I will post. But for time's sake right now, my time has been very, very limited to do these kind of things as I'm spending most of my time really performing research and analysis for my subscribing clients at this current time. So that's why these postings, these articles, these podcasts, these vlogs have been much more infrequent right now. Again, I'll always try to make these forums in which I provide free information. I'll try to do them more frequently in the future. Let's start with the factors that lead people to make poor decisions. Now, the first one is confirmation bias, which a lot of people are familiar with. And confirmation bias really is, to explain it in a nutshell, is when you only seek information that confirms your predetermined notion of how something works. So whether that's in the gold markets, the UK stock markets, the US stock markets, any other European or South American or the Shanghai Composite Index, anything basically which you really are trying to predict what's going to happen in the future and you want the markets to go that way. Say if you're long US markets, you want the markets to rise, you only look for information that strengthens your argument, supports your argument, and you discard all information, even factual information that might be telling you a different story. So we're all guilty of this, and it's a matter of, and actually bankers and financial advisors often take advantage of this perception management game because they know how to commit psychological warfare against you by using confirmation bias against you to manage your perceptions in order to get you to do the things they want you to do. So if that's remaining invested in the US stock market right now, even though the upside is very low and the risk is intensely high, then they'll manage your perceptions. And though most people say, oh, that's ridiculous because we all have an inflated opinion of ourselves. We say, oh, I'm too smart to fall for that. The reality is that psychological studies have shown time and time again that the majority of people do fall victim to confirmation bias. So let me just give you an example. Now this is a political example. I'm not going to get into detail about this because this is off topic, but it is good as an illustration or analogy to really illustrate what I'm trying to show you as far as the negative effects of confirmation bias. So when we look at, I just read an article recently in which Vladimir Putin, the president of Russia, has released a lot of videos showing that Turkey is mobilizing to help ISIS sell their oil. Now, the Turkish President Erdogan said, oh, that's ridiculous. We're not supporting a terrorist group, although my personal opinion is that Saudi Arabia and Turkey are two of the biggest countries that contribute to state-sponsored terrorism around the world. Now, Erdogan basically refuted the Russian president by saying, oh, it's not us that is helping ISIS sell their oil. You have to look at who's buying the oil. And they said, it's Syria. It's President Assad that is buying the oil. Now, you'd have to be an idiot to take Erdogan's conclusion at face value, because ISIS or ISIL, depending upon what region of the world you live in, because ISIS is sometimes referred to ISIL as well, is basically trying to oust Assad. And they're the ones fighting the Syrian government. So why would the Syrian government buy oil to provide funds to their enemy? Just anyone with any sense of logic would say that is ridiculous claim by Erdogan. But if you are on the side of believing the Western propaganda, then you will basically accept what the Turkish president said. Oh, Syria's buying ISIS oil, so really Syria is supporting ISIS, even though ISIS is attacking Syria. You tend to discard any logic and just look for even illogical statements that support your belief. If this can happen where such ludicrous notions can be embraced by many, many people, then it's not really hard to believe that financial advisors, financial managers, brokerage firms, money managers, bankers can convince us by using our own confirmation biases against us to believe stuff that simply is not true. So I often actually say this into bulletins I send to my subscription members that you always need to remove emotion from your investment strategies and your wealth building strategies, because emotions will cause you to make the wrong decisions. So why I'm bringing up emotions again is because emotions is actually what causes us to embrace confirmation bias to lead us into silly decisions as well. So it's important when you're deciding upon wealth building strategies to remain as detached and objective as possible and not to bring your emotional biases into your decisions, because that is going to inevitably lead to a loss of wealth and a loss of money. The last point I want to bring up, even though there's more than just 3 points, obviously, when it comes to detrimental psychological paradigms that we embrace that hurt us in our wealth building, is the fact that it takes courage to actually make money, meaning that you have to be willing to go against the herd to make money. Because if you're basically going with a herd, that would mean everyone in the world is making tons of money and lots of profit. So obviously you have to make difficult decisions that go against the herd and invest in hated assets. And this is the time to get in at the lowest valuations when you have the greatest upside. So in order to invest in hated assets, because you can always invest in hated assets that are hated for logical reasons that will continue to go down, you have to, again, be immune to confirmation bias. So that you have to strip away emotions from your decisions, look at the facts, not be influenced by past bad decisions that may prevent you from making a good, solid decision today, and then make your decisions in this manner. Secondly, I want to talk about gold, because gold is one of these hated assets. You can also obviously clump silver into that category, but for the purposes today of this podcast, I just want to discuss gold. Now, a lot of people, because the Western banking cartel has priced gold in dollars as the international standard, think gold has performed horribly this year, because year over year, meaning December 9th, because I'm recording this podcast on December 9th, from December 9th of last year to December 9th of this year, gold in terms of US dollars is down 9.34%. So that's a pretty significant loss, down 9.34%. But again, that's only spot gold, because you have to remember that if you're buying physical gold, there's a premium of physical gold prices, even in US dollars, over the US dollar spot price. So your losses aren't going to be as great. But just for the sake of looking at spot prices, you know, the dollar is one of the few major currencies in the world that actually have losses. If you look at gold priced in other currencies and dozens of other currencies, gold is positive this year. And even if we look at what we don't consider to be emerging markets, but, you know, stable, developed markets, In the Swedish krona, for example, gold is up 1.15% this year. If we look in the Canadian market, we look at the Canadian loonie, gold is up 5.75% this year. Even in the Hungarian forint, gold is up 4.03%. But if we start looking at emerging markets, here's where we really start seeing gold performing. If you look at the gold in terms of Mexican peso, in the past year, gold has risen 5.32%. If you look at the Syrian pound, gold has risen 12.07%. If we look at the Malaysian ringgit, gold has risen 9.84%. If we look at the Ukrainian hryvnia, gold has risen 30.17%. If we look at the Kazakhstani tenge, gold has risen 51.23% this year. And if we look at the Russian ruble, gold has risen 14.26% in the past year. If we look at the Brazilian real, gold has risen 31.32%. And if we look at the Belarusian ruble, gold has risen 49.33%. Now, of course, as I always say, the value of gold is its weight. And 1 ounce of gold, 1 troy ounce of gold of 99.99 or 49 fine gold is the same everywhere. The real value I'm talking about, because gold priced in fiat currencies is basically gold priced in an incorrect mechanism. But the point of the matter is when you look at gold soaring by 10 to 30 to 50% against a lot of emerging market currencies this year, and dozens of other currencies has been positive, is that gold is basically retaining purchasing power in a lot of markets all over the world. So don't be fooled when you look at things from an international perspective. Don't be fooled just because gold is reported internationally just against the US dollar, and the Western bankers are suppressing the price of gold against the US dollar. You have to look at what's going on in the world. If you look at gold rising against dozens of currencies this year, you'll know the true nature of where the price of gold and fiat currencies, even against the US dollar, is going to head in the future. But the most important thing, like I said, is the real value of gold is its weight. And you should only be concerned with how many ounces of gold you're accumulating, because eventually it becomes a self-evident truth in the future that it will be the amount of weight or amount of troy ounces of gold you accumulate that will help preserve your wealth over the next 5 to 10 years. Now, when we look at the global stock markets, the last point of this brief podcast, or actually it might be around half an hour, when you look at stock markets all around the world, people always think, oh, the U.S. stock market will keep going up forever. But again, just like with the gold price, because there's a lot of things wrong, very structurally wrong with Western markets right now, and there's huge price distortions in the pricing of a lot of Western assets right now because of the insane and foolish monetary policy of the U.S. Federal Reserve bankers. You have to look for cues as to what's the fate of the U.S. stock market is from what's going on with all these other stock markets around the world. So when we start looking at stock markets all around the world, this is just actually year to date. When you look at it, you see that 47 of the world's 93 largest stock indexes are down more than 10% year to date. Again, let me just read you some of these staggering figures. The Ukrainian stock market is down negative 55% year to date. The Colombian stock market is down negative 47.44% year to date. The Kazakh stock index is down negative 43.35% year to date. The Peruvian stock market is down negative 38.23% year to date. The Brazilian stock market index is down negative 35.92% year to date. The Nigerian stock market is down negative 27.81% year to date. The Jakarta or Indonesian stock market is down negative 22.54% year to date. The Chilean stock market index is down negative 18.71% year to date. The Hang Seng Chinese index is down negative 17.90% year to date. The Croatian stock market is down negative 13.65% year to date. The Lao stock market is down negative 13.49% year to date. The Taiwanese stock market is down negative 12.85% year to date. The Bucharest stock market index is down negative 11.38% year to date. So it just goes on and on and on and on. So if you look at the fact that, as I said, 47 of the world's 93 largest stock indexes are down more than 10% year to date. Okay, like this, well, I really actually even don't go by these stupid definitions. They say a 20% correction is a bear market, but these are not normal times because a central banker currency wars are going on, and this incessant quantitative easing that central bankers and every region of the world have engaged in. You're going to see lots of volatility, and you're going to see lots of steep declines in stock markets in the future. So for people that think the FANGs in the United States being Facebook, A is Amazon, and is Netflix. What is G actually? Google, right? The FANG stocks, Facebook, Amazon, Netflix, and Google will indefinitely rise just because bankers have been using high-frequency trading algorithms to artificially pump these stock prices higher when the fundamentals really don't support some of the insane increases that in share price that the FANGs have experienced in the past couple of years. People are going to be shocked again when some of these FANGs collapse in the next several quarters. So again, take a global international perspective to really understand where the future of the US stock markets is going to be. In conclusion, those are the three main pillars, I guess you could call them, that I use to guide my wealth building strategies for Smart Knowledge U. So this year, regarding our Crisis Investment Opportunities newsletter, year to date, our yield as of December 7th has been over 8%, whereas the S&P 500 is only 1.5%. And I think basically over the past couple of days now, the S&P 500 is probably back to pretty much even. And over that same time period, the FTSE 100 in the UK and the ASX 200 in Australia are both down more than 4% this year. And of course, it's been well documented that infamous hedge fund managers, Bill Ackman of Pershing Square is down over 20% this year, as well as David Einhorn of Greenlight Capital. So it's basically just showing the strategies have worked in the past are now all falling apart. So one has to be very, very pliable and adaptive to the fraud that is systemic in the industry to really come up with your strategies. Okay, one last thing just before I go to end this podcast on a very lighthearted, almost comical note. I'm going to put a link, and you can see in the description in the YouTube video, to an article called Most Hated Man in America, Martin Shkreli Spends $2 million on Wu-Tang Clan album. So, not sure if I'm mangling his name, but I don't really care if I am. But Shkreli was the guy that basically is the CEO of Touring Pharmaceuticals. They bought out another pharmaceutical company that made a medication that's essential to cancer patients. And as soon as he bought out this company, he raised the price for that cancer medication 5,000% to basically make it inaccessible to cancer patients, from $13.50 a pill to $750 a pill. So it's just an example of the absurdity of the type of greed that exists on Wall Street. And of course, he received so much backlash that eventually he had to back down on trying to gouge cancer patients to get wealthy. So enough said about that article. I don't want to spend too much time on it, but you can go to the link and read it, because it's just another indication of the comic absurdity of the greed of Wall Street. Okay. Thanks a lot for listening, and until next time, remain intensely curious. So long.